A double-digit earnings gain usually sparks investor confidence. Century Pacific Food Inc., the powerhouse behind brands like Century Tuna and Birch Tree, delivered just that in the first quarter of 2026. Revenues jumped 15% to over 23 billion pesos. Branded product sales expanded, exports rebounded sharply, and net profit climbed 10% to 2.1 billion pesos. On the surface, the story is classic growth. But look deeper, and a more complex narrative emerges, one where the cash flow statement takes center stage. Operating cash flow for the quarter dropped to just 792 million pesos, less than half the level from a year ago, despite rising profits. Capital expenditures pushed free cash flow into slightly negative territory. The culprit? Working capital absorbed much of the operating gains. Trade receivables and prepayments ballooned, offsetting improvements in payables and tying up cash at an uncomfortable pace. Meanwhile, the company paid out over 2 billion pesos in cash dividends, more than its operating cash flow and even slightly above net income. While there's no immediate risk to dividends, it's clear the sustainability of shareholder returns now hinges on the normalization of working capital and ready access to borrowing lines. Receivables rose by nearly 1.7 billion pesos in 3 months, with most balances due from third parties. The company's receivable days edged up to 64, inventory days stood at 121, and accounts payable days closed out the quarter at 98. The cash conversion cycle landed at 87 days. Not alarming for a consumer staples exporter, but noteworthy if sales growth continues to soak up cash. On the funding side, short-term debt rose to 7.3 billion pesos compared to cash of under 3 billion. The current ratio slipped to 1.84 times. Leverage, though still conservative, climbed. Finance costs nearly doubled. It's not a solvency crisis, but it sharpens the focus on cash collections and bank line support. Margins tell a similarly nuanced story. The gross margin compressed as input costs stayed high, and tax normalization weighed on net returns, even as the operating margin benefited from favorable foreign exchange and cost controls. Bottom line, Century Pacific's growth engine is running, but its working capital and cash flow deserve heightened attention in the quarters ahead. For investors, earnings matter. But now, cash flow is the number to watch.